Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 15th of November. Is it time for the dollar rally to take a breather? The sell-off in the bond market continued yesterday as investors kept dumping US Treasuries, possibly on concerns that the policies of the Trump administration will lead to higher than previously anticipated inflation, and by extent faster rate hikes by the Fed. This fueled even further strength in the dollar, with the dollar index rising to levels last seen in December 2015. However, during the late European session yesterday and the Asian morning today, this pattern showed some signs of exhaustion, with modest counter moves taking place. Considering that the dollar rally seems somewhat overstretched and that there have been no material news regarding the upcoming government's plans, we believe that we could see a brief period of consolidation or even a small correction before the next wave of dollar strength. We would like to note, though, that given the elevated uncertainty still associated with the nature and size of Trump's future policies, the dollar is likely to stay very sensitive to any news on this front. As for today's highlights, during the European day we get the UK CPI data for October. Expectations are for the nation's CPI rate to have risen somewhat further. The forecast is supported by the UK Services PMI for the month, which showed that service providers increased their charges at the fastest rate since April 2011. What's more, we believe that the risks surrounding the CPI forecast are tilted to the upside, given that sterling resumed its collapse in October following Theresa May's hard Brexit rhetoric. A significant acceleration in the CPI could diminish even further market expectations for any Bank of England action at future policy meetings, as fears of inflation overshooting the target significantly continue to mount. Something like that could support the pound, at least on the news. From Germany, we get the ZEW survey for November. The expectations index is forecast to rise, while the current conditions figure is expected to tumble. We believe that as long as the expectations print continues to rise, a soft current assessment index may not be that much of a concern to investors. As such, this could prove somewhat positive for the euro. We also get preliminary GDP data for the third quarter for the Eurozone, and the forecast is for the bloc's economy to have grown at the same pace as the previous quarter. From the US, we get retail sales for October. The forecast is for both the headline and the core rates to have ticked down. Indeed, both the University of Michigan and the Conference Board Consumer Sentiment Indices tumbled in October, supporting the case for a slight slowdown in sales. Nevertheless, given that both rates are expected to remain at very healthy levels, we believe that they are unlikely to alter the Fed's plans for hiking rates in December. The nation's Empire State Manufacturing Index for November is also coming out. We have only one speaker scheduled on today's agenda, Fed Vice Chair Stanley Fischer. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.